Hey, what's up, everybody? This is Chef at Conservative Collectors, and we're gonna do a couple videos moving forward from this. And today, I just kind of wanted to do a video on charting. Okay, how to draw zones. If some of you guys out there know me, some of you guys don't. I am a zone trader. I trade off supply and demand. I don't use any indicators. I do know them. I do understand them. But I definitely just chart using supply and demand. Basically, what it is just buyers and sellers in this market. Okay, looking at the 4-hour candles, looking at the weekly time frame, and that's literally all that I really use. Just because it's something that I've been using on a consistent basis and it's been working so far. So if something is working, why change it? Okay. So with that being said, let's chart two tickers today, and I'm gonna do one futures, and then I'm just gonna chart Apple just because Apple is like a very well-known stock that a lot of people trade out there, and tons of different styles of charting, tons of styles of trading, and all those things. But I'm gonna stick to one for now, and definitely will look forward to doing a lot more, a little more different. So expect some variety of videos coming in. So. All right, so normally when I look at my chart, I always open the weekly time frame, and I do this on the weekends. All right, it can be Saturday, it can be Friday night, it can be Sunday morning before market opens. I like to do it before any noise on the charts. So this way that when market opens, you're already ready and prepared with your chart, with or without those gaps. When futures open up on Sundays, because whether it gaps up, whether it gaps down, your chart should be charted already, and you should be ready to have a plan for the upcoming week. And learning how to adjust when it comes to those gaps, that's going to take your part, and it takes a lot of discipline in order to still follow your chart and the price action behind it. So that's why I like it when there's no noise, nothing's happening right now. It's futures are a little open just a bit, but nothing too crazy. It's pre-market, after hours, things like that. So not worried too much. So taking the time to look at this chart, I see this weekly time frame, and what I see here, I just want to point out a couple things. Is this base down here? Okay. So the way that I chart is I grab candle bodies. Okay. So I want to grab these candle bodies here, candle bodies. The candle bodies right here as well. Try to get in as close as possible. So as you can see here, some of the ranges, that's where they're at. Okay, that's where everything it's happening. Okay, even here, that's where we rejected. Here we bounced. Here we rejected, and then the high was right there at one point. So just wanted to point those out as to why I'm looking at that specific price point. And when you zoom out, you see that we've traded in a range for such a long time, right? You want to grab this bottom down here. Like I said, the candle bodies as close as you can with candle bodies on the weekly time frame. Okay, you can drop it down to the wick. I personally don't like to use the wicks, but you can definitely use that and use these bases either way, because the price action is still there. But some of the wicks are, where people had sell orders, where people started taking profit, buying orders. That's what a lot of it is. So that's why I personally don't like to use the wicks on the bigger time frame. I like to grab the meat of the bone, which is all this right here. Okay, some of you might want to grab these highs right here, and yes, that's very, very important. But all the price action, everything that's related to zones, and the fact that we have buyers and sellers, it all comes right here in the middle. Okay, because once these pressures pop, it creates a momentum and the break that'll lead to the direction of that one stock, whatever it is. Okay, so just so you know, this is a huge demand for IWM. Okay, /RTY is the future. Now I'm not sitting here telling you guys that once it comes here you start buying, and you average down all the way, and next thing you know you stop out right below. You don't do that. Okay, so we have a bottom zone here. Okay, this is a huge demand, and you can split that. Okay, you can split that two ways. So you in this case, you want to grab the wick down here, right? And this candle body down here, it's probably the closest one to the price action, because if you grab this wick, all right, let me just show you, it'll match this one over here with the price action here. So in order to get something closer, you at least want to get these pieces here. So now you have like a little zone there, and then on this top, that's when you want to grab that top, and then you have that little zone on top, and you can see all the price action that's happening inside those little zones, right? So now you have a huge area that you can play the bottom all the way to the top. Get to the top, you come down to the bottom, and that's exactly the story that happened here. Okay, so we got that piece. It's not really a necessity right now, just because we're way up here. But I want to show you how I find the meat of the bone when it comes to some of the price action and the zones in the charting. So now we do know that we broke out from this level here. All right, so this was like that 1600. Okay, all the way to like that 1650. That's when we ended up breaking to the stop. All right, so we've been trending ever since. Okay, we hit the high of 2366, and then we hit the low of, what is this, 2081 around here. So this wick down here. Now we didn't drop any lower than that. We just kept kind of shooting to the top. So how do you find a zone when we're at these levels? Okay, this is where a lot of traders get confused when it comes to finding these levels, because they want to call a top wick a zone or a resistance, when in reality it really isn't. It's just a level that was a psychological number that people ended up taking profits. That's all it was. So why am I saying that it's not resistance? It's because there's not enough history on there that can tell you that it's full resistance. It's just a psychological number that it hit and it just dropped. Okay, so when it comes to resistance, you want something that's hit multiple times, that's rejected from that specific area. Now, if we come on here and we reject 2366 1, 2, 3, 4 more times, then that's when you can call that level a resistance level. Okay, and that's when it gets a little more tough, because again, everybody think that that number, that all-time high, is a resistance, when in reality it's not. Okay, the resistance, if you look at this chart, just kind of like I said, when you look at the meat of the bone, you want to look at where the true resistance lies, so the true supply. In this case, you want to use those candle bodies, which is right here. Okay, and if you want to give yourself a little room to the top, you want to grab this wick. Okay, so the true resistance lies here. Okay, so there's a big difference now. Now it looks like it's a little bit off, and you have this all-time high number, but then you have this supply here, and here now you see how like the candle bodies are right on top. We're actually building on top of an old supply, which is now giving IWM, the RTY, a new trend to the top. And this is what catches my attention now, because we're going to break it down in the 4-hour. But what I see here that catches a lot more attention is this here. Okay, you guys see all these wicks? They're everywhere. So this just tells me that there's tons of buyers interested in this specific stock. At any point in time where this thing comes down, it gets bought up so fast. Okay, because it's the wick. It drops down heavily and then it goes back up easily, right? So how do you figure that out? Again, you grab these candle bodies. So this is the bottom one, and then we're just going to take it up a little more, and you see that now you have that zone. Now you have that split area of that whole range, and now you can perfectly see what is truly happening with the price action inside that range. And right now we're over that supply, that 2300 level, that where the supply began. So the 2290 to the 23 what is this, about 823, 18, 17, 15, around there. That's the full supply. Okay, so definitely keep track of this top one here. Okay, 2357. I'm not taking away anything from that. We're going to be aware of that. It's not a resistance. Remember that. All right, we're going to go on the 4-hour. So now that we have that on the 4-hour, I mean the weekly, we have this on the 4-hour, where it's kind of split now, and you can kind of see where the resistance began, where the supply began, and how we tried to get up there, but we couldn't. And then now we're getting bought up at these bottom levels. Okay, so see here, we actually opened up here on Sunday, and we've been trending ever since Sunday here. Every time we come here, we get bought up. We get bought up there. We get bought up there. So everything just snaps back and it creates the price action in here. The price action meaning that there's an exchange of value where buyers are coming in and taking control of this specific demand zone, right? And the demand zone, like I said, is all here. And then this is what happens when you have a supply. The supply comes here and it gets dropped down pretty heavily. The red candles are pretty aggressive, but yet the buying has a little more structure when it comes to the top side, and then the trend to the top has a little more structure as well. Usually that's what happens in the market, that when you see these futures, the red candles are a little more aggressive than the green ones, causing it to catch catch some fake outs in between, and then people get stopped out and it just gets a little chaotic. So this is why having those zones makes much more sense, because you will know where the area of supply is and the area of demand, therefore giving you the 100% confident entry that you can buy the dip or you can buy the breakout. It can be either one of those things, just for every trader, okay? So I want you to remember that. Now, what we have here is we're fighting against all this supply, okay? So we're over the first piece of supply. All right, so this is here. All right, I'm gonna stay a little bit back just so you guys can see the candles here. We're up here with this solid green candle on the 4-hour time frame, and yes, we are in calls. And what we're fighting against is these levels. All right, once we start reaching these all-time high levels, I think people are gonna probably try to take profit and call it a double top, call it a triple top, whatever you want to call it. But what's really happening in here is that the buyers are really in control of IWM, RTY, and it's bringing this to create a new trend to the top side. Now, we can definitely see another, little pullback and then another push up like this, but we can also see a nice push to the top, just because we have a nice bullish candle. So we can see something like this, a little staircase pattern, going up, doing something like that of that nature. Again, it doesn't have to. It can definitely, come right back down. But I'm showing you basically what is happening here with the supply and how we're breaking out just based on the buyers that are in RTY and bringing the stock to the top. All just on showing you the supply and the demand here. Right now, we can definitely get in closer and start finding the little zones in between. But as of right now, looking at the bigger picture, sometimes all you need is two pieces to the puzzle in order to make things right. Okay, and by doing this, you have a trading advantage when it comes to these levels, and you'll be able to hold your position just a bit longer, knowing that we're above a supply or knowing that we're right at demand where you can buy the dip, things like that. So it just gives you a little more confidence when you're in these trades. So again, here is RTY. So hopefully you kind of understood the weekly time frame, how we broke it down. Finding the bottom zone down here and then finding the piece up here, of course, and then looking at the 4-hour. That's all I use. I don't use the daily time frame, guys. The daily time frame is for finding candlestick patterns, and I don't look for that. I look for price action. So 4-hour gives you the full story. A daily chart will give you half the story because it shows plenty of gaps. Therefore, you trade the candlestick pattern. So it's a different, it's a little bit of a difference when it comes to that. But nonetheless, it still has price action that does matter if you do see some candlestick patterns. Okay. So let's do Apple. Okay. Hopefully I didn't go too fast for you guys and you guys are capturing the explanation here. And well, of course, I'll definitely be making more videos, so stay tuned on the YouTube channel. All right, so here we have Apple. Everybody knows that it did stock split here on this one candle, and I like Apple because the chart is so unique in itself, right? Every stock out there has a characteristic and has a value in it of itself. Okay, the way you got to look at things is it's a little different when it comes to each stock, because every single company has a different type of value. Therefore, an investor is looking at it differently, from the other guy. You have your retail traders, you have your you have your big money coming in, you have banks, you have market makers, you have all these things, and every single person is looking at it so different and looking at the value in a different way as well. But also value changes when things happen to the stocks. When we have news articles, the value changes and it becomes crazy momentum, either to the downside or to the top side. So now it's being viewed a little bit different. When they get stock splits, things change, characteristics change, everything changes about the stock. But nonetheless, sometimes the value is still high. It's just a matter of what's going to happen. But even with that, you still got to understand how to draw, how to identify these zones and these areas of value. Okay. So with Apple, we all know it's a great company. Everybody um, owns like an Apple phone or something that has to do with iPad. I personally don't. I am not an Apple fan, but definitely believe in the company and its growth. Okay, so don't knock me for not liking Apple products. But so what I want to know, you guys to realize about Apple is that Apple became a new stock trend characteristic right here after the split. Okay, so what I like to do on this specific chart is I like to mark the high, all right, of that wick. I like to mark the high of here, and I like to mark the candle bodies. Okay, so the way you want to look at Apple is looking at it in two pieces. Okay, below 121, you become a little bearish, but it's not even full bearish. It's an area of value. This is the area where you want to start buying Apple. When we start trading over 127, what is this? Yeah, 127. You want to be a little more bullish, but a little more cautious because we're heading into some resistance up here in the supply levels. Okay, this is all supply only because this is the high that we've been at. We've never really trended up there, and every time we come up here, we get rejected. So 1, 2, 3, 4, a few times in there. So that's when it becomes resistance. Now that's how you want to look at it. Now Apple, it is it's very simple to just identify the levels. And what the awesome part is that you don't have to, draw zones in here because the characteristic is a little more different. What you can do is look at Apple like this. Okay. At one point, Apple got bought up so much in this level. We have a trend line. All right. And when we came back down to retest, we created another demand right here, right on top. All right. Same thing happened here. We came down and look what we did. We created another demand right on top of this one. So again, you get your staircase pattern, okay? And let me just show you, get a little visual. All right, and the staircase pattern never has to be too perfect. I mean, we can go down like this again. I mean, this thing can do whatever it wants. I mean, this thing next green candle, it can just be, all the way to the moon and you're at like 150. Every catalyst, market sentiment can affect, these type of movements. But overall, you want to look at the bigger picture. And this is what's happening currently with Apple. We're trending up. It's a nice staircase pattern and we're squeezing in here. I mean, we can stay here for the next month all the way into October, and in October we end up popping to the top. Like, stocks do whatever the heck they want, with or without us. Whether you're here in the morning or you're not, it's gonna do it without you. So this is how you can look at Apple, right? And also the best thing to do is go on the 4-hour time frame and find those areas that have a lot of ranges, and those ranges is the ones where you can identify, that you can mark for yourself and see like what the bigger picture is doing. See, so even here I'm grabbing a lot of the candle bodies. I'm not really touching the wicks because I don't care for them. I'm grabbing the meat of the bone where it's actually pressing together and causing pressure. Therefore, look at what happened here. That top got rejected, came back down, we're still inside, and we have a nice staircase pattern to the top. Okay, so Apple is trending very nice, right? You can draw this little trend line here, and it hit that top perfectly. So the next breakout is going to happen over this like 135, and we're going to hit probably about 139. Now that is the only if it continues to trend up with the market sentiment. I mean, this thing can trade sideways, and next thing you know, we're coming back down, to this like 121, 129.80 area, potentially all the way back to 28. I mean, it can do whatever the heck it wants, like I said. So you do know that we are at a resistance area, because here we couldn't hold. We tried to break, but then got smacked down. We even did the retest here, and then we started trading here. This is where we became sideways, and then we built a nice staircase pattern that hopefully we can continue to just trend up. This market has been very hot, and it's been trending. Things have been breaking all-time highs, just been breaking out. So it's been a little crazy on the good side, but also you just got to be very cautious and be aware that there's some supply here, and you can definitely just take profit. You don't have to hold something and hope that the market will continue to go up. So, this is just the way that I like to chart, and the way that I like to see and understand where the buyers and sellers are going to be. Therefore, whenever it comes down and it's a nice big red candle, you can definitely buy at these levels of demand, and your stop loss is literally right below. So the risk to reward is amazing, because the next day you can wake up and it's just going, while everybody is missing the trade, you're already in it for that swing trade. And then that's a lot of times how I find some swing plays. You just go from one zone to the next one, and then you hold it for a few days. You can sell into strength, get back in, so you're consistently making money off those day trades versus trying to hold just like one position and capturing the full trade, when you can be in and out of that staircase pattern and make multiple positions and multiple profits in multiple days. So that's just kind of a me charting zones, a little basic idea as to what I look for, going from the weekly to the 4-hour. That's all I use. I trade on the 15-minute, but I'll leave that one for another day. These are the only two time frames that I use for charting, the only two time frames that I really care for, that make sense when you're trying to identify where the true price action is happening. Okay, so I'll leave you guys with that. Hopefully this helps you guys understand what type of content you will be receiving in the next year, 2, 5 years, who knows how long we'll be here, but we'll definitely keep on posting these videos, and hopefully you share with your friends and family. Go ahead and subscribe to those links, share them, do whatever you guys got to do. Let's get these things rolling, right guys? All right, thank you guys. I appreciate you guys, and stay green in the next couple of days. Tomorrow's Friday, guys, and trade some ODTEs and be safe. Don't go too crazy. All right, guys. See you guys on the next one.